Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Taxbytes for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi, my name is Stephanie Wickham from expattaxes.ie. You're listening to the Taxbytes for Expats podcast, the show that explains the do's and don'ts of income taxes for people who are moving to or from Ireland.
Hi everyone, welcome to this episode of Taxbytes for Expats. Today, the topic is going to be something that we see come up quite regularly, which is questions around relocating to Portugal. I think in recent years, it's become maybe a goal for particularly business people in Ireland to maybe retire to Portugal. And some of the tax rules that are effective there make it an efficient option for people depending on the circumstances. So we're going to have a conversation with a tax lawyer who is based in Lisbon, Jose Barros. But before we introduce him, I'd just like to give him a brief introduction because he has some fantastic experience which is really relevant to the discussion that we're going to have. So Jose is based in Lisbon, as I mentioned, and working at a Spanish-Portuguese law firm, which have 13 offices in Spain, 7 in Portugal, mainly in the Lisbon area and along the Algarve. Jose himself graduated in law from the University of Lisbon Law, and he also did a master's degree with a scientific specialisation in tax law. He began his professional career as a lawyer in 2014, where he worked in the tax department from day one, with the main focus being on private clients and international taxation. Fast forward, in 2019, he joined CCA Law, a medium-large law firm where he worked in the tax department with a greater focus on matters of direct and indirect taxation of companies and real estate investment. In January 2021, he joined Ruggiero Fernandez Ferreira and Associates, where he worked in the tax litigation department. Recently, he's moved to a new law firm. I'm going to try and fail to pronounce it correctly, but Martínez, Echeverría and Ferreira Advogados. So he can correct me as to the correct pronunciation, where he will now be working in areas of tax law, and he's actually been tasked with launching the law firm's tax department. He has a specific focus on the Non-Habitual Residency Scheme, and he's really well placed to kind of have a conversation with us today about the do's and don'ts of this scheme, how it might apply, the areas people need to watch out for, opportunities and pitfalls. So Jose, thank you so much for joining us. After that introduction, I suppose the first question I'd like to ask you is, why are people choosing Portugal?
First of all, hi. Thank you, Stephanie, so much for the introduction and for the invitation to do this podcast. Going straight forward with the question, why Portugal? Well, besides the special tax regime we have for global mobility, let's start with the things that really attract people to Portugal, and one of our biggest assets, which is the weather, the weather and natural features, warm summers, temperate winters, diverse and beautiful landscapes, beaches, cliffs, quiet parks. It's a wonder for nature and for people that really are keen to move to a warmer country with the Mediterranean climate. Secondly, we are notoriously friendly, the Portuguese people. There are some lots of surveys and lots of information online regarding Portugal and identifying Portugal as being one of the friendliest places for people to come and live. We are very used to speaking English, basically, especially in Lisbon. Porto and Algarve are very used to speaking English everywhere. And that's a plus for people to move and feel more welcome. Also, our food, our cuisine, sometimes overlooked regarding the Italian and Spanish food, but we are a country with one of the biggest coastlines regarding the size of the territory, and we have these huge economic sea area. So lots of fishing, lots of fresh food, seafood. So that's a plus. We're also one of the top of the wine producers in the world, especially the known Porto wine across the world, but also some other places. Also, regarding the cost of living, Portugal is really affordable. At least to live on the daily basis, getting groceries, eating out, drinking. So life, it's much cheaper in Portugal than in other places. Even though to getting a place to live, it's getting quite expensive, at least in the center of Lisbon, Porto, and Algarve, some places. So that could be just the biggest expense that someone trying to move will have, and trying to find a place it could be challenging, but that's basically the main cost that someone will have. Also for digital nomads, expats working through remote working, we have very good internet service. Actually, we won a lot of prizes, our companies, in innovation in providing internet services with cable, fiber, internet massified across the country. So very good for remote working with good services to support your remote working. For families also, there are we have a good education system, public system, but also very good international schools, particularly in Lisbon and in Porto. So the whole family is trying to move, will find it easy to get a good place for their kids to study, either in elementary schools, but also high schools and universities, which we ranked fairly good. And finally, we also have the public health system, which is always a plus for a lot of people, depending on the country they came from. Our healthcare system is good coverage, some not so good coverage for common medical services. For that, it's better to have a health insurance, but for especially accidents, urgency matters, and more grave diseases, it's a very good system. Yeah, that's basically the main features of the country as itself that are more likely to attract people to move to Portugal. And then, of course, the tax regime that we will talk about soon enough.
You know what? Even before you start on the tax, I just want to get my passport and go to the airport. Like you should work for the tourist board as a brilliant summary. And when you list it out like that, it's so clear as to why Portugal has become such a I suppose, a beacon for people who are looking to, move to a sunnier climate. And all of those things are so important, because they are the things that day to day matter. So that's a brilliant answer to the question, why Portugal? You've just listed many, many reasons why it's a good idea. So with that in mind, the focus of the discussion is the tax piece. Tell me about the non-habitual residency scheme. I mean, my comment would be, what I find is that, there's a lot of information online about this. Clients tend to come to us with an overarching knowledge of what it is, but it's going to be really good to hear it from an expert, because obviously, like any tax regime, there's terms and conditions, and it's really important to understand that if one of the reasons for your move is to take advantage of it.
Yes, indeed. The non-habitual, there's a lot of information online. most of the information is not like 100% accurate, or there are some, they give the highlights, and there are a lot of requirements and small things that could really change your specific case and how will you be taxed going forward. But going back a little bit, the non-habitual residence regime was created in 2009 with the goal to attract to Portugal high net worth individuals, also highly qualified professionals, and also pensioners, people just retiring and getting their retirement in a sunnier, warmer place. As well, also to have a general attractiveness to foreign investment. This status is granted to individuals who must become tax residents for all intents and purposes, especially tax law purposes, in meaning that you have to register as a tax resident, register yourself as a EU national resident, but we could go into more details going forward. The main request, the legal requirement, is to not being deemed to have been a Portuguese tax resident for the last 5 years. So even if you lived in Portugal, if you left and come back 5 years later, you could get the non-habitual residence regime. NHR, let's keep it short for non-habitual residents. NHR individuals may enjoy the status of this specific tax regime for a 10-year period. After that, they will be deemed normal tax residents as myself, for one instance, and will be taxed according to the standard personal income tax in Portugal, which is called IRS, but we'll keep on calling it personal income tax. This new tax regime, the non-habitual residents, targets non-resident individuals who are really keen on moving to Portugal. We have other programs for visas, like golden visas, but those are not designed to actually attract people to live in Portugal. And the NHR, you really must reside in Portugal and become a full resident. In broad terms, the non-habitual residence regime is especially designed to give you a general exemption on foreign sourced income, or at least a very limited taxation, and also a limited taxation even on incomes that you earn in Portugal. And we will check some details further on. As I was saying, you have to become a tax resident, so you will be able to request a tax residence certificate, which is very important, not only for the system or the regime to apply, but also in terms of getting around the double taxation treaties and applying the double taxation treaties. In this case, we're speaking more about Ireland. So we have a double taxation treaty agreement with Ireland. And once you become a Portuguese tax resident, you can issue the certificate to present before the Irish tax authority and request the application of the double taxation treaty, which is essential to the regime itself.
Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
And that's a very good point, Jose, because one of the things that kind of comes up from an Irish perspective is, the concept of ordinary residency. which is, the concept that if you've been a tax resident for 3 consecutive tax years, you become an ordinary resident, and it takes 3 years to lose that status. So it's entirely valid to mention that, because people often believe that it's possible to be resident of a one location only. And I know we've worked on clients who we've kind of had to explain to them that there's a kind of a process to navigate there, isn't there? So ultimately, the double tax agreement kicks in at that point, but there's analysis needed. The thing that's coming through to me when you're kind of going through the things there is just there's conditions, and I suppose the value of having an expert help you guide you through understanding that is obviously invaluable. You are obviously really familiar with like qualification for the scheme, and you've listed it there in terms of what someone needs to do. Like from a practical perspective, what are the things that somebody needs to do if they're going to try and qualify for the scheme and they meet the conditions that you've listed out already?
Before getting into that and addressing the issue with the double tax, the residency issue, there are a lot of, and we have that experience with a lot of clients trying to figure out how to conjugate the residency rules in Portugal, the residency rules in Ireland, and what is technically called a trailing residency. You leave the country, but you could still be deemed a resident in Ireland also. So there's some double residency issues that usually arise with Ireland. That's mostly for sure, and that needs to be priorly assessed, as well as because of the regime has so much specification depending on the types of incomes you earn. That is also something that really is needed to analyze, but we will go a little bit more in detail, a little bit more forward. As to how to qualify to the scheme, as I said, the main rule is you have to be deemed a tax resident. You have to become a tax resident. And for that, Portugal has 2 basic rules. One, it's most common internationally, is the 183 days rule, which you have to stay in one country for more than 183 days, and you are deemed a resident. Portugal has created, like some other countries, what we call partial residency. So instead of assessing the residency for the whole civil year, calendar year, we assess residency in 12-month periods. So let's say that you register today as a tax resident in Portugal, stay in Portugal for 3 months, then go back to Ireland for 2 months, and then come back to Portugal and stay another 4 months. So in total, you have from June 29th going forward. In this example, you would have been 7 months in Portugal, so you would be deemed resident from today onwards, and not on the fiscal year itself, because you would be partially deemed resident for this part of the year only, and moving forward, of course. There's also a second rule, which is that you don't need to be in Portugal for 183 days, but you need to have housing in Portugal, a home available to you on any given day on a 12-month period, with the condition that this residency must be maintained and occupied as an habitual residency. So you don't need for the 183 days, but like the flip side is that you cannot be more than 183 days in another country, so you're not deemed resident there and don't lose the Portuguese residency. So as long as you don't stay on another country for more than 183 days, you could stay less than 183 days in Portugal, as long as you have utilities contracts, you actually come here for part of the year, you have all the services, you have a full functioning home, you would still be deemed resident.
And that would then apply to maybe somebody who is based in Portugal but travels frequently for work to other locations. So, for example, somebody who maybe, lives in Portugal, spends the majority of their time there, but is required to maybe travel to the UK, Ireland, the US, Germany for their work. So in other words, you don't have to spend all your time in Portugal. It's essentially to be your base, and you're spending sufficient time there to need the things that you said: utilities, a home, a link with the place. Is that right?
Yes, that's basically it. Of course, that depends on how you go abroad. So let's say you go 1 month or 2 months to the UK, then 1 month, 2 months to Ireland, but you like short-term rental, you don't have actually a property there, or you're in, let's say, Airbnb or hotels or whatever, and you have your home here and your address and everything set up. So when you actually can come back to your home, that home is Portugal, and that's the main.
Yeah, it's your main home. So somebody's met the conditions, they understand the rules. Tell me, distill down the tax advantages, because that's pretty much where the rubber hits the road, I suppose, for most people. They want to understand, if I qualify for this, what is it going to mean from a cash perspective, and what are my taxes going to look like?
Well, first of all, like I said, the main feature is regarding foreign sourced incomes. For example, retirement and pensions income, as long as they are not deemed to be arising from Portugal. So foreign sourced pensions and retirement pension and pension income will be taxed at a 10% flat rate. Of course, that the country where that pays the pension, let's say Ireland, it has also its own internal law, and then we have to apply the double taxation treaty. So even though in Portugal there are non-habitual residence regime, which is very beneficial, there's also always the side of the source country where the payments are performed, and that also needs to be assessed. But going forward, regarding, for example, employment income, provided that it's actually taxed abroad, so at least there needs to be some level of taxation, let's say in Ireland, for the employment income you earn sourced in Ireland. And if that's so, then according to the non-habitual residence regime, you would be fully exempt from taxation in Portugal regarding that employment income. A little bit different is independent service rendering, because we only have this exemption for what we call high value added activities defined in the law, which basically are like general directors, executives, directors of administrative and commercial services, directors of production, directors of hotels, restaurants, also doctors, physicians, dentists, teachers. There's a full list of activities that we call high value added that could be encompassed in the non-habitual residence regime, which basically will be exempt from taxation in Portugal, provided that such income could be taxed in the source country.
And is that before or after application of the double tax agreement, Jose? So, for example, if Ireland has the right domestically to tax it, but doesn't use that right because the treaty allocates rights to Portugal, does that mean NHR is not in play, or is it still available?
When the double taxation treaty agreement specifically states that there is exclusive taxation in the residency country, in this case, the income will not be exempt.
Okay.
But what needs to happen is that, let's say that there are cumulative taxation. So in this specific income, let's suppose that Ireland could tax part of it or a percentage of it, limited, but could tax, but doesn't, because of the internal rules itself. But according to the double taxation treaty, it could. Then Portugal exempts. That they just, in the specific case of Ireland, we have to check the double taxation treaty check every type of rule regarding the specific income we're talking about and check how the rules work. So if exclusive taxation in the residency for independent service rendering will be taxed in Portugal. But then there's the second part of it, because even in that case, for independent service rendering, provided that it's a high value added activity that you are performing, even in that case, you could get a 20% flat rate in Portugal.
Okay, right.
So that's the flip side of it.
There's still a preferential rate. So the reason why that's, and I suppose to distill that down, because I'm conscious for most people listening to that, it sounds very technical. My first comment would be it is, and what generally people try and do, which I would try and do if I was not a tax expert, is they try to simplify things down to one line. In other words, the NHR means this. The reality is the NHR scheme is a fantastic scheme. But how it operates in your specific circumstances is exactly that. It's your circumstances. So in other words, when we as advisors are looking at a client, we are looking at their specific circumstances, their specific income, their specific assets, and a specific pattern of activity. And that is then how we reach the conclusion as to whether or not Ireland has taxing rights, Portugal will apply NHR, or would maybe give a preferential rate. But I think the way you've explained that is really good, because ultimately, I think what you're saying is, if NHR doesn't completely exempt the income, there's likely still an opportunity for a preferential rate to be applied. So in other words, it's not bad news if for some reason you don't meet the condition for exemption, there's still a preferential rate. To compare that 20% rate to what a client coming from Ireland would be used to, most married couples who are collectively earning over €80,000 are paying taxes in Ireland at 48%, with social insurance on top of 4%. So their 52% effective tax rate now needs to be compared with what I'm hearing is the 20% income tax rate that NHR would offer in Portugal. Okay, I mean, there's so much to this. It's a lot, isn't it? Like, it's yeah. I mean, that's to distill it down. But ultimately, what you're saying is there's a lot to it.
Yeah, but if I may just let me add something, because we didn't follow through the passive income, which is also very important for a lot of people.
Yeah.
And because like property rents, interests, dividends, certain royalties, other capital income, capital gains from any foreign assets, including shares or real estate. This case more designed for people that have like investment portfolio or even a small saving or are the shareholders of an Irish company and receive dividends, for an instance. These are also exempt under the NHR scheme, as long as they could be taxed according to the double taxation treaty. What usually happens is that the rules for these types of income, they usually let the source country to tax just a little bit, like 5%, 10%, 15%. So even if they don't, if the double taxation treaty says they could apply that rate, limited, but could apply it anyway, then we get a general exemption in Portugal, which is very attractive for these types of incomes. And of course, depending on the specific situation of the client, let's say someone that's a shareholder and director of a company, we could always try and figure out how to have a different mix of types of income in order to maximize the benefits from the NHR according to the specific circumstances of that person. So, yeah.
One point I would just add there as well, because I think this will naturally come up, is I suppose from an Irish perspective, one of the things we need to watch for is the Irish-Portuguese treaty has a specific provision which tries to keep individuals in the Irish tax net, specifically if they're disposing of certain assets. But I think you're entirely right. I think we've had success for clients where we've been able to kind of help them optimize the mix, in terms of extracting from a company it's just a case by case analysis, isn't it? Generally, is what we find is just helping the client work out what suits them best.
Yes, of course. It's no size fits all. It's impossible.
No, it's never does it? It's never well, this is the same as the last case. There's always a nuance. Jose, look, there's so much to what you've said, and I just think that anybody listening to what you've said, it's entirely clear that you understand the nuances of both of the NHR, but also of the double tax agreements, and that is such an important piece of, I think, being able to advise in this space. Naturally, people listening to this may want to be able to reach out to you and ask you questions. One of the things I'd like us to do is to do another episode, because I know we touched briefly before the call on cryptos, and there's a lot of questions come with that. That's a topic for another day. But in the meantime, if somebody would like to have a conversation with you, how do they reach out to you? And also, please correctly name the firm you're with, because I completely ruined the pronunciation of it at the start of the podcast.
Yes, the company, as you introduced, it's a Spanish-based company, but now it's an Iberian company because it has a big operation in Portugal also. We work on both countries. The name is in Spanish. It's Martínez Echevarria and Ferreira. My contact, let's say, is Jose Barros, which is Jose with a more Anglo-Saxon pronunciation.
Irish pronunciation.
With an Irish pronunciation. I know that you don't have these double R's for Barros. You have more. I worked summer jobs in the UK, so everyone called me Barros.
So sorry, yeah.
So my email is Jose, Jose, Barros, Barros, at martinezechevarria.com. Also, we can provide you the phone number, 351-210-517-611.
We'll put them in the show notes. And I think if anybody wants to reach out, generally we suggest that they kind of initiate a conversation with ourselves to kind of see where they sit in the framework of what we've discussed. But Jose, let's do it again soon. Let's talk about crypto tax next time. Thank you so much for your time. We really appreciate it.
Sure will. Really good. Really nice chat, and hope it went well. So see you next time. Thank you so much for everything.
Thank you so much. Talk soon.
Thanks for listening to Taxbytes for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.